Welcome to Top Trading Guys, folks. Today is 24th January and tomorrow Tesla earning. So this video is for pre-earning analysis of Tesla. So let's take a look and see what the Tesla is be doing. So we're gonna look at couple of things, folks, today. Look at the technicals, we're gonna look at the financials and analyze and macro analyze and see what I think of my thesis where Tesla is heading. All right. So if you take a look at the previous quarter where Tesla expected EPS was $1 and they beat it and got it the 105 right here, but the revenue slightly missed on it. Now, that was the 2022, folks. Okay, but this quarter their expected EPS is little bit higher, $1.12, and the revenue also they're trying to expect 24.66 over here, 24. So their expected revenue is almost growing to be almost $4 billion more they're expecting revenue. But I do not care much about the revenue, folks. I always need to take a look at the fair idea of things. But let's first right now see what the technical look like. Okay, so technically Tesla sell off right here and now is grinding higher. So first of all, if we take a look at right now, price is 143.89. so if you do 143.89 divided by the forward P ratio right here, you know what, straight away we can get into here. It comes out around 27 times forward P ratio, right? So let's keep it in mind, 27 times you're paying right now, buying at this price. Okay, but technically support is intact right here. Sloping support building is nice and bullish right here. The next resistance out here for is 152.57 right here. That's your next resistance, 152, right? 152.85. That's your 50-day moving average resistance to watch out, folks. Okay, that's your bullish scenario. Now if you take a look at here, bullish, we've been last almost I would say about 3 weeks Tesla has been bullish. About 1 month Tesla has been trying to be bullish right here because we have a drastic sell-off happened right here. So as we all know that this is now 2023, is now 2022. So technically that's the resistance right here. Market is waiting for the earning, and we all know that every time when Tesla earning comes in, I always take a look at their flows, order flow. A lot of people want to bet on calls and puts, right? So the ratios are, most of the retailers are very bullish on Tesla all time. Most of the Tesla fan followers, they like Tesla, so they always buy calls and puts. But this time, folks, I noticed that a lot of volume has went down crazy drastically, folks. When I used to see the previous quarter earning, they used to be like 160,000 volume, 180,000 call options volume right here. This time I see the options activities are like 8,000, 10,000, 40,000, like that. Nothing like nothing above 100,000. Most of the here, and that time used to be, all the premium used to be like $10, $12, right? Now is $8. Now now the bullish scenario and bearish scenario, how people, if you betting on the bull scenario right here, which is implied volatility normally 69%, folks, on average Tesla, but they jack it up to double. So by tomorrow you might see around 150 approximately right here Tesla. So what happens is this premium would be like $9, $10, something like that tomorrow. Maybe $9, something like that would be right here. Okay, so what does it mean? The theta decay would be around $1.50, maybe around $2 right here, and then implied volatility is 135. The Vega would be around 5-6 cents, something like that. So percentage of the profitability is 59 cents. This is out of the money call. If you buy right here, out of the money call, so you will be paying like $800 one contract to buy to make a 59. So let's do multiply by 59 cents divided by 8 right here. So sorry 59 cents divided by $8.25. Your percentage of profit is 7%. So basically $1 moves Tesla, you get 7% profit. $1 you moves, you get a 7% profit right here. But the theta decay is almost like 100, and right now is $1.20. Tomorrow we'll see what happens, because tomorrow evening earning comes out, right? So implied volatility is almost 135%. So if they bring it down to 69, right? So all the bulls and bear both right here. If they bring it down to 180, so approximately $4 right here, sorry, $3, $4, 450, approximately $5 will be gone. So $5 right here, sorry, $5, so you need around $10. So tomorrow if anybody buys Tesla, calls or puts, does not matter, $10 goes up or down, people will lose the money. Okay, $10 regardless, you buy calls or puts, there will be IV crush. Remember, you won't get over, IV get crushed. And if the Tesla goes up $10 or Tesla goes down $10, you will be losing money. Even $11, I would say, between $10 to $12, both calls and puts most likely could lose money because of the IV crash. Okay, so this is the what I can see right now. But folks, I can tell you that volume has drastically went down on activities on Tesla lately. So maybe people are running out of the cash, right? So that could be one of the reasons. Okay, so keep that thing in mind. But also let's take a look at the fundamentals, financial fundamentals. So what I notice here, folks, so Tesla, if you look at the net income, I'm always interested in net income, not the revenue. Revenue can be anything, folks. So if you look at the net income of trailing, these are the trailing means 2021 fourth quarter and 2020 2022 and 2020, yeah, 2022, because 2022 last quarter earning is coming this, so basically 2021 last quarter plus 2022 first 3 quarter earning total, we have Tesla had a $11 billion income, net income right here, divided by the revenue. If you do it, 14% Tesla profitability. I like to look at the net profitability. So Tesla making 14% net profit. In this kind of any auto industry, folks, the profitabilities are very, very low. Why? Because it's capital intensive business and you are dependent on a lot of supplies, demands, a lot of things you are dependent on it, supply chains, right? And they have to produce and help you more, to supply you more, and that's how the business sustains, right? If you have a shortage, you'll be paying more money. You know, if any product you needed and if there is shortage, you'll be paying more money to acquire in order to produce the car, right? That's what is happening. So percentage of profitability is 14%. When it is a low percentage sector, the PE ratio will be lower. So what does it mean? Auto industry, if you take a look at it, many auto industry, their PE ratios are like 6 time PE ratio, 8 times, 7 time, 5 time, right? So Tesla has the PE ratio 27 times. So people think, no, Tesla is a technology company. They have bottom line is what is the income they are getting through? Do you think they are getting more through the selling the cars? I mean, what different things than the other car they are other companies making? Maybe 80%, 90% income is coming the same as Ford. That means it's not a technology, right? Everybody use the same technology too. But I understand for folks, FSDs and all the other stuff. But at the end, 90% is the same thing. Whatever the business Mercedes, BMW, they are doing, right? Same kind of business Tesla is doing. Maybe 10% income would be different than the Mercedes and BMW comes out. So 10% doesn't count as it. So that's why this capital intensive business, the PE ratio is lower. When you are Apple, if you look at the Google, if you look at the Microsoft, they used to have a 35% profitability, 50% profitability, 40% profitability previous quarters, right? Which have been in 2022, if I recall all those things. So that is the reason auto industry would have a low P ratio because capital intensive. That is the reason 14% profitability. And as you all know that Tesla announced on December that they want to reduce. If you buy a car before December, you get the $3,500 credit, but I think didn't work out that tactic. Then in January, they said, you know what, we cannot sustain, we cannot pile up the more inventory on the lot. So what happened is they reduced the price almost 20% right across the all the models. They reduced almost 20% prices, right? So when you company reduce the price 20%, profitability is 14%. So I'm sure inflation is still same pretty much. Number might be little easier, I'm sure, but still 20% reducing because inventory is piling up. Keeping inventory on auto industry is very dangerous, folks. Why? Because is that auto industry is the one It's not like real estate where you just buy the house and just hold it and get appreciate. Cars, if you buy it and put it in a parking in garage, still you lose the value, right? So there's a lot of disadvantage you have it when you are in the auto industry. So that's why Elon Musk has to sell his all the cars. So demand reduced, they have to, what they have to do is, they have, because not demand reduced, but basically people don't have the money. Why? Because interest rate has gone up, folks. When the interest rate goes up, what happens? People will not have money to, people will decide when too much premium to pay or installment to buy the car, because premiums would be 3-4 times higher right now, right? Because of the credit crunch, right? And that's why interest rate is very high, and people will not be able to buy the car as the rising rate environment. Plus, people are running out of the cash now. Though people who had a cash, they already bought the car in 2021, 2022. They bought a lot of cars. So now choice is to sell the car cheaper price to attract the more the buyer, those who are cash. People who are trying to borrow the loan, they have to go through all these installment, right? So that is another things going into the market right now. So they try to compete with the other sellers also lining up now in the market. So there is another competition. Earlier, in few years ago, we had a less competition. Now Tesla has a more competition. So varieties of things folks need to apply. So in this kind of environment, folks, and when you have more factories, right? When a Tesla has a more factory, you have a more liability. When you have if your factory produce 100% of the 100% value of it, and you are delivering and people are creating demand, then absolutely is good. But if it is demand not there and your factory is not producing, then is a liability, folks. So there are having a liability is not a good idea. So those are the area you need to consider, folks. And outstanding shares are outrageous here. When if you look at the Tesla, 3 billion share based off of $11 billion income, 3 billion is outrageous. If you look at the Meta, if you look at other company, the based off of 10 billion, you should have a 1 billion outstanding share, not 3 billion. So they have a 2 billion extra outstanding share according to me. If I calculate based off of industry, looking at other companies comparison, is off of income. I always go how much company making the money, not the revenue. Revenue, you can have a crazy revenue. Revenue is fine. Need to see what company is making. So that's the reason heavily diluted share. So for me, folks, overall, upcoming time is not good. So technically look like bullish right now, but market maker always set up a trap, folks. You know that, right? They always like to collect the premium, billions of dollars. People who are betting on it. So that's what is setting up the trap. We could pull back. So let's take a look at the excuse me. See what the smart money looks like. Now we have a little reversal last 2 days happening here. Okay, so that's why I need to watch out. So once we have a reversal, look at the MACD already started entering into bear territory. So let me see 4-hour chart, folks. 4-hour chart still looking bullish right here. You can see that it's still bullish. Daily chart is bullish. This channel is, so as long as this support is intact, it's still bullish. Once we break this support, we could go lower, but we have only earning left now, so we can't rely on that technicals right now. We just need to look at the financials only. Based off of that, like today Microsoft earning came out, they cut down their force of 4.5%. That's why the stock couldn't generate the revenue, and they're saying the next 2 years the time will be very, very tough, and we the whole technology industry will have a difficult time. That's what the Satya Nadella said that in the conference at 5:30. So same thing, Tesla would have the similar situation. As the rate rising environment, people will not be able to buy the car, right? And if they want to do it, they have to reduce the price, the high competition. So that's why I need to look into it, folks. But so far right here, so what happened is here, folks, once we broke the trend line, which is 132 area, then baby can roll down and go and test lower, right? Okay, that would be your, this support would be here. So for earning, folks, I told you whether you're bullish or bearish, both could lose for tomorrow. But long term, folks, long term into say like a monthly 2 months situation like that, market could only compress out here. We might have a little pullback and everybody think that okay, Tesla gonna go down or up or whatever it would be. So bullish scenario I mentioned to you here, but in this macro, if I look at the macro condition, folks, I'm not bullish on Tesla, folks. Okay, I am not right now because I explain you whole thing in this video, right? So that is the one reason. Okay, but yeah, absolutely, guys, folks. So just let's see tomorrow if you want. We are always live, folks, right here on YouTube, everyday live, top trading edge. Join community and learn every day. We are live here, right here. These are all the live sessions, 7 hours. Plus, I post the video also, and everyday market update too. So if you like this, please join the community. It's free of charge, folks. I every day go live, and all the profit I make also I posted it on the live recorded too. You can join that. Plus, right here, everyday live update video I posted here too. Market Tesla update video also I posted here too. Every time I've been posting Tesla weekly update, Tesla update, everyday market update, right here, Tesla update, right? So if you join the community, folks, please, you'll able to get all the update free of charge. Join every day morning 9:30. Thanks. Bye.